Ladies and gentlemen, good day and welcome to the TD Power Systems Limited earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Devrishi Singh of CDR India. Thank you, and over to you, sir.
Thank you. Good morning, everyone, and thank you for joining us on the Q3 and 9M FY22 earnings conference call of TD Power Systems Limited. We have with us Mr. Nikhil Kumar, Managing Director, Mrs. M.N. Varalakshmi, Chief Financial Officer, and some of their colleagues in the management team on this call. We will begin the call with brief opening remarks from the management, following which we will have the forum open for an interactive Q&A session. Before we begin, I would like to mention that some of the statements made in today's call may be forward-looking in nature and may involve risk and uncertainties. Documents related to the company's financial performance have already been emailed to all of you earlier. I would now like to invite Mr. Nikhil Kumar to make his opening remarks. Thank you, and over to you, Nikhil.
Good morning, everybody. Thank you once again for joining us today on our earnings call. I trust all of you would have received our results and investor presentation. Now I'd like to discuss with you TDPS's financial performance for the quarter and 9 months ended 31st December 2021. Standalone. Our total income on a standalone basis for 9 months was 5.13 billion versus 3.37 billion for the same period in the previous year. Profit after tax and comprehensive income for 9 months was 314 million rupees versus a profit of 81 million for the same period in the previous year. Manufacturing revenues for 9 months was 4.93 billion versus 3.24 billion. Exports and deemed exports contributed 51% of manufacturing revenues. Our manufacturing order book, including our Turkey operations, stands at 10.01 billion, out of which 3.46 billion is regular manufacturing business, 6.39 billion railway business, and 0.16 billion is the Turkey business. Export and deemed exports, excluding the traction business, is about 55%. Order inflow. We're very happy to report a big increase in the 9 months order inflow for TDPS India from 3.07 billion last year to 4.12 billion this year for 9 months, an increase of 34%. Order inflow from exports and deemed exports is 2.42 billion, about 60% of the total order inflow. Projects business revenue for 9 months is 0.13 billion versus 0.1 billion the same period in the previous year. The order book for the projects business stands at 0.16 billion. Consolidated. Our total income on a consolidated basis for 9 months was 5.86 billion versus 4.38 billion for the same period in the previous year. Profit after tax and comprehensive income for 9 months was 378 million versus a profit of 295 million for the same period in the previous year. Profits have been impacted due to a foreign exchange translation loss of 6.93 crores. It's a notional loss from our foreign subsidiary Turkey due to a sharp depreciation of the Turkish lira to the Indian rupee from 8.84 Turkish lira to Indian rupee at the beginning of the year to 5.51 Turkish lira to Indian rupee at the end of this quarter, a drop of 38%. It is important to know that TDPS Turkey has an actual operational profit of rupees 37.26 million. Our consolidated order book is 10.21 billion rupees. We continue to maintain a strong cash position of 2.13 billion rupees. Now I'll talk a little bit about the order book, market situation, and guidance. The total order inflow up to end of Q3 was 412 crores versus 306 crores in the same period last year. Once again, in this previous quarter, we have seen strong order inflows from all segments of our business. In particular, we have seen strong inflows from steam, gas engines, and gas turbines. In the case of gas engines, they're also getting a good number of orders from our second major customer located in Germany. We're also happy to report another order from solar gas turbines for 2 more machines for the mobile power units for the shale gas industry. In the case of hydro, we have finalized a number of large orders in the beginning of Q4, and these will help boost the numbers of our order book for Q4. Overall, the trend is positive and ensures that we will have a strong FY23. In the case of new segments, there's a very active inquiry pipeline of about 2.25 billion INR for synchronous motors and about 0.5 billion for large induction motors. We hope to get a good share and be very active in these segments. These orders will also boost the revenue for FY23. Last quarter, we announced an order for the repair business in wind generators. We are pleased to report that we have successfully dispatched this machine. It has also been successfully commissioned. With this success, we are most certainly going to get a number of machines in this quarter, and we are in active negotiations with a number of customers. We have successfully tested the traction motors for Indian Railways, and we'll be calling the customer for final performance testing in March. This project still is on track. Market situation. Now I'd like to talk a little bit about pricing and the effect of raw material prices on our gross contribution. The worst part of the impact of raw material prices was in Q3. From Q4, we will see better gross contribution with the new prices filtering in. In Q3, we had some very good orders in the aftermarket business, which helped contain the impact to a large extent. The biggest negative impact that we have taken in Q3 are from the Indian market customers. But as mentioned, we will see a return to around 30% in Q4 and 31 to 32% by H1 next year. The market continues to be buoyant with a number of orders in the pipeline. So the main focus of the management is to improve the gross contribution to 32% or better. More aftermarket business in wind and repairs of our existing fleet can increase the gross contribution better. All our export customers have given us price increases effective from 1st Jan this year, and the impact will be seen immediately. Other contracts are protected with price variation clauses, and some of our customers have extended the relief beyond the contract since some raw material price increases are not being reflected in the indices that the PVC clauses are based on. Guidance for this financial year. Manufacturing business, our top line guidance of 6.9 to 7 billion indicated in our previous calls remains unchanged. However, we are happy to now improve our guidance for profitability with EBITDA margins ranging between 11.5 to 12%. And we're also happy to announce that we will be having a PBT on a Concall basis, including exceptional income of minimum 720 million plus compared to 553 million last year, representing a growth of at least 30% in these difficult times. TDPS Turkey, our top line will be around 0.8 billion. Total manufacturing top line between 7.7 to 7.8 billion. Projects business will have a top line of 0.25 billion. All our subsidiaries are going to be profitable except the US subsidiary, which will be break-even on EBITDA basis. We're also giving our first class guidance for next year. We'll have at least a 10% increase in the top line of TDPS India and improvement in the gross contribution to 31 to 32% as mentioned earlier. This brings me to the end of my initial remarks. I'll now be happy to address any questions that you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Himanshu Upadhyay from O3 Capital. Please go ahead.
Yeah, good afternoon and good morning, and congrats on good set of results. Okay, so
Thank you.
yeah, the first thing was on this Turkey business. Okay, the loss what we have taken, the translation loss, it is on our in one of the older calls we had stated that we have not brought back the money from Turkey. Okay, so this translation loss is on our cash what we were holding in that country, or it is on the P&L side, the translation loss you are telling. Just can you elaborate on that part, and how much would be on the cash which we were having in that subsidiary, how much has been the translation loss, and what is the value of that cash currently?
Shivarlakshmi, I'll ask you to answer this question.
Actually, the translation loss is on the current assets of the company, and this translation loss is because we converted from Turkish lira to Indian rupee. But actually, all our contracts are in euros. So when we bring back the money, it will be in euros, and this loss will be wiped off.
Okay, okay. And one thing, on the order book, when we see the current order book, let's say this, about 21, okay. So Concall is 1,020 crores, okay, versus December 20 was 1,067 crores. So there has been decrease in domestic railways, which is okay, but we are not seeing significant increase in the order book, okay, as of now versus last year, okay. The biggest jump is in the domestic from 93 crores to 150 crores, okay. So can you elaborate on what gives us confidence on the growth what we are having, because the order book currently is not showing that remarkable improvement. So some idea.
So the Indian Railways, the railways business will be decreasing every year by about 100 crores.
It will be,
if you look at
order book will decrease.
So the order book will decrease because we are executing every year. So from the railway business, we will have a decreasing order book because it's a fixed contract for 8 years.
Oh.
And so the other part of our business, the manufacturing, the generator business, that we are seeing an increase in the order book, as already mentioned, of about 35%. So there is an increase in the overall executable orders in the generator business. As far as the railway business is concerned, we will do what we are supposed to do. Every year we're supposed to do 120 crores. We will do 120 crores from that.
Okay. Okay.
And that will keep decreasing. That will keep decreasing every year until we add a new customer, which we are in the process of adding a new Indian Railways as a new customer. So until we add this new customer, that large order will keep reducing in value year on year.
Okay. Okay. And one more thing in the order book, the exports, okay, and the deemed exports remain flattish, okay. So the major growth is, and even Turkey has come down from 76 crore last year to 15 crores. So can you elaborate on outside India what is happening, and how are you looking at the order book in outside India? Yeah, domestic has done pretty well, but exports, how should we look at, and Turkey, these two entities for FY23?
The exports has been flat. Big increase has taken place in the domestic market. That's correct. Turkey, as we told in the last call, there is a big decrease in the Turkish business, and we don't expect the Turkish business to contribute significantly in FY23. So we had about 80 crores. We have 80 crores this year. Next year it could be as low as 25 crores. So we don't expect a big change in the Turkish because there's a big problem in the Turkish market due to the devaluation of the Turkish lira. Most of the power plants and projects that come up in Turkey are with euro funding or with dollar funding. And with the sharp depreciation in the Turkish lira to the extent of almost 40%, it is very hard for borrowers to secure funding with the extent of depreciation which has taken place. And then therefore that's impacting the projects in the Turkish market. So until we see some stability in the exchange rate or improvement in the exchange rate and some stability in the Turkish market, we expect the business to be quite subdued.
Okay, and one small question last, then I'll join back in the queue. With this significant depreciation in lira of Turkey, how competitive is it for manufacturing base versus India currently now? Because from India we were exporting to Europe and Turkey was basically manufacturing was for Turkey only. But with this significant reduction, do you think it becomes more interesting?
No, it's not. It's also, they also have 20% inflation. So it's not possible to, so you have your increases in costs are going up at rate of 20% per year. It's not possible. It compensates the drop in the exchange rate.
Okay. So that facility will have to be used only for Turkey, and whenever the revival in Turkey happens, then that facility becomes again the source of growth for us. So that way we need to understand.
Yes.
Okay. Thank you from my side.
Thank you. The next question is from the line of Nikhil Upadhyay from SIMPL. Please go ahead.
Yeah, good morning. Thanks for the opportunity. I hope I am audible.
Yes.
Yeah. 2-3 questions, sir. If we look at it in the commentary, you mentioned that this quarter our gross profit margin was around 30% versus Q2, and some of the repair business supported us in terms of having a better gross margin. And in the last call, you had mentioned that once this wind orders repair we are able to deliver, then probably a large part of a market will get opened, which we were not playing earlier. So if we add the orders which probably wind can provide with the price increases and all, if we say 31-32% gross margin, it looks a bit weaker. So do you think that the cost inflation could sustain at a lot higher rate than what price increases we have taken? That's why the mix of it will keep it at 31-32, or how the price increase versus the commodity and the better margin order mix is playing out for us? Probably next year, this quarter is.
Yeah. So I've given tentative guidance. It could be viewed as being a little conservative, and I'll be happy to improve this guidance in the upcoming calls, as in when we see better visibility of the business. But yeah, you're right. There is a lot of scope for improvement, and we are aware of that. And we are working towards not just limiting the gross contribution towards 31-32, but we are working towards increasing it, hoping it to be better than that. And I'll be happy to report better numbers in the quarters to come. But at the moment, we are placing the number a little bit conservatively.
Okay. Secondly, sir, even in last quarter and even if we look at our presentation order breakup, the export orders have been the export market still seems to be a bit weak, and even in Q2 you mentioned that a lot of growth is coming from domestic and export. How is the inquiry pipeline shaping up in export market?
Actually, export market it's quite. We have a lot of good orders coming in from Q4 from the export business. December, the month of December tends to be very quiet for the export markets due to Christmas, New Year's, and everything. So we do see a slacking, some slack in the export order booking in Q3. It happens every year, but we have a good number of orders which are picked up in Q4, and we will show a growth in export business by the end of the year. That's for sure.
Okay. And last question, sir. In terms of the new initiatives like the traction motor and wind turbine repairs, how is the business shaping up there? How you mentioned that the order pipeline is pretty good, but in terms of our references and everything, if you can just share how do you see the business shaping up?
I've mentioned that in the commentary a little bit. I've mentioned that we are in a number of active negotiations with a number of customers who own these old wind generators. So it's going well. We will pick up some orders for sure in the next couple of weeks. And for the synchronous motor business, there's a very active inquiry pipeline under negotiation of about 225 crores. We are actively involved in multiple negotiations with multiple customers. So we will get some success in this area too. And in addition to that, about 50 crores of business in the large induction motors. Once again, very active live inquiries are very active, and we will get a portion of that also. Now, how much exactly we're going to get, I'm not going to be able to. We should get a good share, is all I can say, and we are very active and quite aggressive to pick up the orders.
And any pricing competition? So how is the competition behaving in terms of pricing?
Of course, competition is there. The competition is there, but we are also, in the segments where there is a certain value given for the technology and for the technical ability of the players. So it's not we don't have a situation where there are 20 players or 15 players in the market. There could be 2, 3 in every segment that they're working on. So competition to that extent is limited.
Okay, fine, sir. Thanks. I'll come back to this.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Dhavnil Desai from Turtle Capital. Please go ahead.
Hi, Nikhil. Good morning. Congratulations for a very strong set of numbers. Nikhil, I wanted to understand one thing that we have guided for 10% growth on standalone. And at the same time, we have significant inquiry pipeline on new initiatives. Aftermarket also will kick in. Hydro also, from your opening remarks, seems to be coming back. So is this all factored in your guidance?
As I said, I've given initial guidance. It's a little bit. There are a lot of things in the pipeline. There are a lot of initiatives that we have started. We are actively involved with a number of opportunities, and we're not targeting just a 10% increase in our top line for next year. That's the minimum increase that we're going to have compared to the previous year. We click 1 or 2 big orders, we click something big, I'd be happy to report huge increases. Potential is there. It's very, very there. It's very much there, but it's not yet on hand. And the moment I get it on hand, I'll be the first person to report it to the market. I'm very happy to do that also. What we're projecting right now is what we see as a very clear visibility as of today, of our business for next year. But as you mentioned, and as others also have mentioned, there is a scope for a much wider and much better growth potential.
Okay, got it. So second question is slightly more at the industry level. If you look at the Europe, the way the power crisis is going on there, and even the most hardened proponent of EFC, which is Europe, is now turning to conventional fuel. So in that context, how do you see that helping us? Is this something like that happening in India? Or do you see more demand for larger units because of those changes? Any thoughts on that?
Vinay, would you like to answer this question?
Mr. Vinay Hector, please unmute your line from your end.
Yeah, can you hear me?
Yes, sir.
Yeah.
Yes,
Hello?
we can hear you.
We can hear you, sir.
Hello? Hello?
Yes, we can hear you.
Mr. Hector, we can hear you.
There is some problem. I can't hear.
Ladies and gentlemen, just give me a moment while I check his line. Ladies and gentlemen, we have Mr. Hegde on the line. Mr. Hegde, please take the call forward.
Yeah. See, there was some problem with the line. Can you repeat that question, please?
So Vinay, my question was that in Europe, because of the power crisis that is happening there,
Yeah.
they are turning back to the conventional fuel. And, is something like that happening? Is it having a rub-off effect in India? Here too, power prices are moving up. So are people thinking more about larger, thermal capacity, more conventional power, more captive of larger capacity? Is that something, that kind of dynamic shaping up in India?
No, actually, as far as, our knowledge is concerned, nobody's looking at some large conventional, power plants, but many of them are shifting to, biomass, garbage burning and gas engine business. So that is getting reflected in a big way in Europe also. And even in Russia, we are getting a lot of orders for the gas engine, which is not conventional. According to our information, more and more people are going away from the conventional power plants. What I mean is coal-based power plants.
Okay. Got it. So my last question is on the the new initiatives. So I think Nikhil, you talked about the synchronous motor. This induction motor, large induction motor thing. If you can give us some sense on what is the market, how large that is, who are the players, basically the dynamics of that industry and market. That would be helpful.
Yeah, we are basically in the induction motor business. We are looking at the sizes around larger than 3 to 4 megawatt. We're not competing in the sizes below 3 to 4 megawatt. So in these larger sizes, there are applications are of course industrial uses and large pumping stations, like irrigation projects, and competition is again limited to 3-4 major, I would say, major players. People like PHL are definitely the competitors in this market. But the market that we are going after, the size could be around 200 crores.
Okay. And currently the idea is again
for the induction motor business, and approximately the same for the synchronous motor business. So together you can say we're addressing a market of about 400.
Okay. And in both these businesses, currently we will only tap the domestic market, right? I mean, international market is not on the radar. Hello.
At the moment, we are targeting the domestic market, but we have also started quoting for a few jobs selectively in the international market. Let's see how it shapes up.
Okay. Great. Thanks a lot, Nikhil. I have questions. I'll come back.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants, we would request you to limit your question to 2 at a time. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, good morning, and my question, Nikhil, is basically on the new initiative front. So apart from the ones which we have mentioned, like induction motors, synchronous motors, direct railway supply, and the refurbishment of wind generators, any other new, any other new initiative that we are looking to launch in next year or in FY22?
Yeah, there are a couple of more. We are working on a few more, but I don't want to announce it until we get our first order. I can say there are two more major initiatives that we are working on, and we are bidding in the market with the products, and let's see. We should get some success in the next couple of months, and we should be able to announce it soon after we do that. But there are two other major initiatives.
Okay, and approximately how big can this initiative be? If you can just give us
all this information will come later, please.
Sure. And on the margin front, Nikhil, the kind of new products that we are launching and the refurbishment of wind plants, although the contribution will be low, but it does seem that the competition in this space is relatively less. Do you think, and the demand also reviving in some of our major segments that we cater to, do you think structurally over the next 2-3 years, if the demand remains strong and we get traction in the new initiatives, our gross margins can move to 34-35% in 2-3 years?
That is definitely the goal of the management. That is one of our major goals, to improve the product mix and to improve the pricing, with the mix going after certain segments where the technology is better, prices are better, and aftermarket business, all put together. The goal of the management is to bring it to 35% in the next few years. It's not just a top line oriented goal that we have, but we're also focusing a lot on how to improve the gross contribution.
Sure. And last question on the steam side, on domestic steam side. I think if I remember correctly, during the last cycle for captive steam market, the market size was around 400-450 crore. Given what is happening currently on the power side and the inquiry pipeline we have, do you think we can surpass that earlier figure, or it's still too far at this point of time?
Can I?
When you go ahead,
Yeah. See, basically, as we told in the last call also, there is a huge demand for the steam turbine generators, especially for the Indian market. As we told, mainly it is coming from the distilleries and waste heat recovery plants, garbage burning plants, and these are all small in the range nowadays, and it is not 40-50 megawatt. And we have close to 95% market share, and definitely we have a plan to reach 250 crore on the steam turbine generator business alone. So there is the market for another maybe close to 75 to 100 machines which are below 2 megawatt, mainly low voltage, where we are not there, so that we are not considering.
So, but do you think the revival will happen across other industries as well for putting up more captive power plants, given how currently the situation is on the power side, and which might actually get worse over the next year or so?
Yeah. There are a lot of greenfield projects are also coming along with the brownfield projects. So a lot of expansions are also taking place in the steel and cement industries. So there is a good demand.
Yeah. Okay. Thank you.
We are seeing the domestic market very active and very vibrant, and we don't see. We see that there's a lot of momentum right now in India, and it's just going to continue. This expansion is going to continue. The market is in expansion mode right now.
Sure. Thank you. I'll come back in the queue.
Thank you. The next question is from the line of Shivan Savaria from JHP Securities. Please go ahead.
Good afternoon, sir. A couple of questions. So in the previous participants, while answering the previous participant, you said that there's a potential is very high for good inflows coming in, but these are not in hand currently, and hence the conservative stance. So, sir, is it that there are certain risks that you foresee that would result in these orders not coming our way, and hence the conservative stance?
No, that's not the way to look at it. We are to show the 10% growth, right? So if we are going to do, TDPS India will do, let's say, 700 crores this year. We're saying that we'll do, let's say, 775 minimum next year. We're factoring in some amount of business which is going to come from the new segments and growth in the existing segments. That's already been factored in. Now, beyond this 10%, beyond this 775 crores, we're talking about 800 crores or 850 crores, which we are certainly targeting from the management point of view. We need to pick up, some more, we have to have more success in some of the things that we're doing. And that is on top of 775, on top of, so that's what we have not yet got a clear visibility, but the moment we do, because we are actively bidding in a number of projects which could result in this kind of number. So that's the real situation. It's not like we have not factored in some business from these sectors. We have, and that's how we come to 775.
Okay. And in terms of the capabilities to get into these newer segments, we currently possess them.
Yeah, of course. We have the capability of making all these products, and our customers are, the thing is that we are going after the domestic market. So the sectors are once again steel, cement, sugar, food, chemical, fertilizer. All these customers, most of them, not all of them, I would say, already have a TDPS generator. Size could be 5 megawatt, could be even 30 megawatt, 40 megawatt. So it's a situation where the entire steel plant or entire cement plant is running on the power of our generator. And now this power which is being produced by our generator has to be used to drive some motors. And if we say, okay, we want to make the motors also, no, people know that we can do it. Customers are, all technical people. They understand these things. So we don't see any obstacles from that point of view. There is a market, and we're going after it. And we have a reputation in the market for producing large electrical machines, and people understand that.
Correct. So got it. And sir, the next question was from a generator business perspective. Could you just make us understand the addressable market size in India and the addressable market size that we could cater to from an export perspective?
Yeah, that's a different question. It's complicated. There are different sectors, different. So I think that's beyond the scope of an earnings call.
Okay.
We can talk about that separately.
Sure, I'll take that offline, sir. Okay. Thank you very much.
Thank you. The next question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Hello. Yeah,
Rahul
congratulations on a good set of numbers, sir. So just one question with regards to the new initiatives. You had mentioned in the previous call about 10 units of 15 megawatt generators being supplied for gas turbines for the US shale gas oil market. So given the oil prices, the way they have moved up in the last one quarter, do we see now increased pipeline and the acceleration in the kind of, momentum in terms of the way customers are approaching us?
We have got a total of 14 machines right now for this. 14 machines for this shale gas business.
14 machines, yeah.
So, yeah, 14 machines of 15 megawatt size. It's a big chunk of business. We have a meeting with their top management in the next couple of weeks, and we'll get a good forecast of what the business situation is like, especially because of the capex revival in the oil industry also. I can't give you a clear answer right now. Probably next earnings call we will be able to give you a better perspective.
Okay. Sure. Thank you, sir. Thanks, sir.
Thank you.
Thank you. The next question is from the line of Rohit Balakrishnan from iThought PMS. Please go ahead.
Hello, am I audible?
Yes.
Sir, I request
Hello,
you to
Rohit.
speak a bit louder.
Yeah. Hi, Nikhil. Good afternoon. Many congratulations on good numbers. Nikhil, just wanted to understand on this base to energy in India, anything that you see, any movement that is happening. It's been a fair bit that we've been hearing, but just wanted to get a sense from you how you are thinking about that space. Is there something that, if not next year, but probably in the next couple of years, something is going to happen there, any movement? So that was my first question.
Yeah, Vinay, would you like to answer this garbage burning plants? Yeah.
Yes. So basically, it is happening, and yearly, it's mainly coming in the capitals, and yearly there are 8 to 10 projects are coming, but it is not going in the same speed as other projects. It is slow, but there is a huge potential. You can say every district can produce a 5 megawatt minimum. So there are projects coming, people are investing, but it is not going so fast. So there is a huge potential in this segment, and it is going to continue for next at least 5 to 10 years.
Understood.
There are a number of projects commissioned and running successfully in Telangana, Hyderabad, even Bangalore and Noida and Lucknow. So there are projects coming everywhere.
Okay, got it. And Nikhil, also, last year I think we had gotten an order from Navy about 20 odd crores. I just wanted to understand, if you had mentioned at that point of time that's a repeat order and probably the size may also increase. So anything you would like to share, anything happening on that regard?
Yeah, there are some orders under negotiation, but nothing has come for announcement right now. There are some jobs under negotiation with the Navy. Let's see, it's a little bit slow in terms, it takes a little bit of time for them to finalize, but there are some active inquiries.
Right. And maybe last question in terms of a slightly longer term. Do you see, given whatever you mentioned in terms of a lot of buoyancy both here in domestic markets and export markets, you probably need to put up some capacity in the next maybe 12 odd months or
we are going to increase capacity utilization in Bangalore, and we will continue to try to add incremental capacity with the existing plants. We're not thinking of a new plant at this point of time. Let's see next year around this time if we need to do that. But at the moment, we're not thinking of a new plant.
Sure. Thanks, Nikhil, and all the very best. Thank you.
Thank you.
Thank you. The next question is from the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
Sir, how do you see orders coming up from the wind energy segment? Because there are a lot of wind energy installations which are now needing refurbishment also, and overall also with the whole switch to renewables. Do you see a whole lot of new orders coming up?
Yeah, there is a big wind business in India. TDPS is not a major player in the wind business. We are still in the process of trying to acquire one or two customers. It's still taking more time, but the wind business also tends to be a fairly risky business in terms of big swings up and down. So at the moment, it's really good in India. It also has a good potential. We're not in the position to report something exciting in this sector, although it's a big sector.
But there is a
that's what it is. There is a big market for wind. Yes, there is.
And there is a tailwind also.
That we don't have the competitive product sometimes, or we're not willing to take on some of the risks involved with the contracts. And that's the reason why we're not been successful in this business.
And to add it to this, some of the turbine manufacturers like Vestas or Gamesa, Siemens Gamesa, they make their own generators.
Yeah. And in the past, we've had a number of wind customers, and all the wind customers
I missed the last one.
have all gone bankrupt.
The other gentleman made.
So
I missed the last one which the other gentleman made.
Yeah, what I was trying to tell you is
Vestas and Siemens Gamesa have their own generator manufacturing capability.
Okay. So basically, we can tie up only with people like Suzlon who do not have their own unit.
Suzlon also makes their own.
They make their own.
Okay. So that market is a little difficult to penetrate.
Yeah, there are many people coming now, like Adani wants to come, so there will be opportunities. But as Nikhil said, we are not really very aggressive. These are small machines, and we had not a good experience in the past with none of our wind customers.
Okay, sir. Thank you very much.
Every single wind customer TDPS has had in the past 10 years has become bankrupt.
Okay.
So it's not a very successful line of business for us.
We have a wind customer in Germany where we started supplying last year. So that one or two, we choose the customers because we don't go behind everybody because there is huge risk.
Okay, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Adit Shah from Vibrant Securities. Please go ahead.
Hello, good afternoon, Nikhil and the management team. Really happy to see the performance. Nikhil, I have 3 questions. One is, was there some postponement of deliveries given that we were saying we will do 200 crores of quarterly revenues for the next quarter 3 and quarter 4? So that is first question. Number 2 is on other expense. I see that your other expense is, I think, 11 crores if I ignore employee, and historically it has been around 14 to 15 crores. So any one-off item there, because that has helped the margins. And the third question I have is on the competition in general. Given that Crompton has been acquired by the Murugappa Group, and obviously we have turned it around really well. Are there any products which overlap with them, and where there is a collateral increase in competition because of that? These are 3 questions.
So there is no postponement of deliveries. We are still on track with our guidance. What we have told you, in a quarter on quarter, there could be some spillover from one to the next, but overall we are giving the guidance that we stick to our yearly numbers. Okay. Varalakshmi, can you answer this 11 crores other expenses, because I'm not clear where.
Very much in line with our budgeted. So 11 to 12 crores will be the other revenue expenses.
Okay, but ma'am, all the previous 4 quarters it's been 14 to 15 crores. But yes, okay, I'll take that. It's a steady state number.
Some quarters there could be a little spike if we have some outward freight extra or something like that. But otherwise it's very much in line with our budget.
Okay, and it's fair to assume that this entire employee cost and other expense, this entire bucket will grow at, say, low single digit. Is that fair assumption? Because given that there is so much of demand out there, are we seeing wage inflation and in general inflation of other cost items? How do you see that?
There will be some 5 to 6% increase in the cost, which will be the inflationary part.
Okay.
That's what we are looking at.
And new hiring, will that add to any material increase in the employee cost overall?
Yeah, employee cost also we are not having too much. We have done a lot of automations and things like that. We are not hiring too much of employees also. So 5 to 7% inflationary cost is what you can look at.
Okay. Thank you so much. Third question was on competition, particularly from CG.
The commentaries is we see them sometimes on the smaller machines on hydro. We don't see them on the steam turbine side. We will see them on the large induction motors, and we will also compete, and they're a big player in the Indian Railways business.
Okay. So small hydro in induction motors and Indian Railways, these are three areas where there is an overlap. Is it correct?
Yes.
Okay. And given what we have been saying about our ambitions in these areas, this is factoring in the fact that CG is now run by a new promoter and run well versus the past.
Yeah, I don't understand the question. I mean, we have respected them in the past for their product quality and everything, and we respect them now, and they are a good company, and we have to compete against them.
Okay. Understood. If I can just pitch in one more question, please. This 9 months, you said the order inflow is 412 crores. Is it correct?
Yes.
Okay. So which means that for this quarter it is around 120, around that number.
Yes.
Okay. So may I know, were there any issues with closing of orders, given that we were doing 150-160 crore sort of bookings every quarter? Just want to understand that.
So as you know, export tends to be a little bit slow in December, as mentioned earlier. So that's the only reason why Q3 tends to be a little bit lower. But we have a strong order inflow in January already, and we will deliver on the numbers what we have projected.
Understood. Thank you. I will join the queue for more questions.
Thank you. A reminder to all the participants, if you wish to ask a question, please press star and 1. The next question is from the line of Alisha Mhavla from Envision Capital. Please go ahead.
Hi, sir. Good afternoon, and thank you for taking my question. So just wanted an update on the other Indian Railway project that we were bidding for which I think we'd done some test supplies that they were going to test in the locomotives. Is there an update on that?
The update is that we're calling the Indian Railways for inspection sometime in March, and we will offer the motors to them, and after that we will dispatch it. Then they have to mount it on a locomotive, and then there'll be 6 months testing. After that, if everything goes well, we get to be an approved supplier.
Okay. So maybe the outcome of this will probably be in H2 of next year or maybe early 24, depending on the delays, etc.
By Q3 next year, next financial year, we should get the approval.
Okay, sure. And so just also wanted to understand the order book that we have right now. This is an indicative timeline by when this is to be executable?
Except for the traction order, which is a long-term contract, all our orders will be executed within 12 to 14 months.
Okay. And so for repairs, this is primarily for the steam generators, I believe, that you were talking about last quarter. Have we started this repairs and replacement business, or is this something that will commence from, say, next quarter, next year?
No. Repairs of our existing fleet is an ongoing business, which is obviously we can repair our own generators. This has been going on for, I've been saying this is an increasing trend of business because we have a large fleet which is also aging. And every year more and more machines come up for replacement and refurbishment. So this will continuously increasing business for us. The wind repair business, as mentioned, we have delivered one, and we've been in negotiations for a number of new orders.
Sure. And just one last, all the new initiatives that we've spoken about, whether it is with respect to wind or synchronized motor or the induction motor, most of which are, like I said, the pipeline is looking strong. If we do manage to convert some of it in Q4 or early 23, will we start supplies in 1 or 2 quarters, or then, like, what is the lead time?
Yeah, it will be 6 to 8 months delivery time.
From the time we get it, 6 to 8 months of delivery.
Yes.
Okay, thank you.
Thank you. The next question is from the line of Himanshu Upadhyay from O3 Capital. Please go ahead.
Yeah, hi. Good afternoon again, and for the opportunity. Thanks. My question was, as we are diversifying into different segments and more products, do we think we need to do some incremental capex in FY23 or something? And earlier we had mentioned that till our facility for 1,000 crore is feasible, okay? So we stand by that thing. And secondly, on employees, do we need to increase our employees, or you think again the guidance remains the same what was historical, that till 1,000 crores we are fully geared up with the existing facility and the employee base and everything? So just this thing.
CapEx will be between 20 to 25 crores per year. This will be upgradation of our facilities, debottlenecking, trying to improve the capacity utilization, trying to improve the capacity incrementally, all those, automation, the combination of all these things. And yes, we stand by the earlier guidance that we have 1,000 crores and we're not adding any major capex or major employee cost.
Okay, so whatever incremental gross margin is coming, that's why we are coming to the higher EBITDA margin, which we, I think around 13% or 13.5, what we stated in the initial comments.
No, I think EBITDA was 11.5 to 12 for this financial year.
For this. No, for the next year, FY23, what we were.
Yeah, next FY23 will be better.
Okay. And see the new businesses, what are we are coming with the traction motor and all those. So will it be that at some stage, once we cross an X amount, we need to have a dedicated line for that type of business, or you think whatever?
We already have.
Okay, so there is a dedicated setup already. So that's why the capex is not required. And this 20 to 25 crore is every year you are expecting, or it is for FY23?
Every year.
Okay. So from here on, my capex will be higher than my depreciation in the next few years now.
Yeah, approximately 12 crores. It's not material.
Okay. And any inorganic opportunities in the business? Because today we are seeing that we are more diversifying into other sectors, okay? Is there some inorganic opportunities which you visualize for yourself, and not just in India, but let's say outside India also?
No.
Or you think you want to?
Not. No.
And any specific reason why? It means why everything you want to do organic?
I think that is beyond the scope of the earnings call conversation. We can discuss it offline.
Okay. Thank you then. Yeah.
Thank you. We'll take one last question, which is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thanks for the follow-up. Nikhil, in your initial commentary, you talked about good traction on the gas side. If you can tell us how is the progress on and how is the demand from both our customers, especially the new customers that you have got.
Vinay, you take this question.
What I didn't get. What is that traction and?
What is the traction on what is the business development on or the business progress on the gas engine side?
Yeah. See, gas engine, you have two major customers, and there is a lot of curiosity, a lot of questions coming on the new business line. See, today, literally, we are in every electrical rotating vertical. So, in our business, when we start, making a new product in the market, offering the product in the market, it takes anywhere between 1 to 2 years. So these two customers, one is our major customer who is in Austria, and we are expecting a increase in the business in the range of around 20 to 25%. And one more major customer with whom we started the relationship last year, we are going to get a significant amount of business, and there is a big potential to grow. So these things takes time, but in this two customers we are already established. But when talking to the new products, even though Nikhil told that every industry in India has our generator, but still when you go with the new product, then there are some EPCs, there are some approvals, factory audits, and all those things. So we have done with many of those things, and now really in the market.
Sure. So given the traction that we are seeing with the large customers on that side, and hopefully the new customer also will see ramping up next year, can we expect this business to touch 170, 180 crores in FY23?
180?
170, 180 crore combined from both the customers.
Yeah, it should be in that range. Already with one customer, we are in the range of around 120 crores.
Sure.
And next year we should be in that range.
Sure. And last question on the hydro side. Nikhil, hydro in FY20 had reached around 160, 165 crore of revenue contribution from hydro side in FY21 and 22 were a bit low. So given the inquiry pipeline and orders in hand, do you think hydro can come back to 150 crore plus kind of revenue in FY23?
Hydro,
basically, we will not give a definite number on each segment like that. It's a little bit too early. Hydro will definitely be above 120. To what extent we can't say right now, but it will be more than 120.
Sure. Okay. Thank you so much.
Thanks.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments.
Yeah, thank you everyone for this earnings call. Thank you for joining our earnings call. If you have other questions, please feel free to get in touch with our investor relations team. We look forward to interacting with all of you once again at the end of the next quarter. Thank you.
Thank you. On behalf of TD Power Systems Limited, that concludes this conference. Thank you for joining us, and you may now disconnect.